Hi, everyone. On those happy news, I'm Ashley Webster in for Cheryl Casoni. Also joining me for the hour, we have James Frischling, co-founder and president at NewOak Capital, and FoxBusiness.com's Dunstan Priel. Gentlemen, thank you for being here. Should be a fun hour. So with James, you wanted to jump in?
Yeah, I did. I really see two, whether it's stocks or it's bonds, I'm looking at two relatively expensive markets, but with the government's commitment, and that's the U.S. government's commitment to QE2, the punch bowl is going to stay at the party, and actually I think they're going to keep it flavorful and flowing. But again, China this week, European debt issues next week. I still see this really just more as a little bit of profit taking, and there's nothing wrong with taking a little bit of money off the table and looking to re-enter at some better balancing points.
I'm as concerned with these comments from the Cisco CEO as I am with the sort of the global chess game that's going on. I mean, we were aware that there's
one company.
This currency.
Should we be so concerned on such a large scale?
I believe so, because I mean, Cisco is a global company, and it's talking about it both ways. It's talking about we're not selling our products because they're not buying them. So when you're talking about not buying those network products, that affects the whole tech industry. But when companies out there aren't buying Cisco's products, that means they don't have the money to do so.
To the bigger picture.
So I'm looking more on that sort of micro one company as opposed to the global problems that have been going on for quite a while.
James.
Sure. I guess for Peter or for Kimberly, the major indices right now are essentially at, if not above, their pre-Lehman levels. And I don't know if the U.S. economy or the global economy, actually, I would say it's not in a better place than at those times or at that time. So I guess my question is do you think there's really much more to run? Is there really room to go from here?
Let's go with Peter. You answer that first, and then we'll get Kimberly's reaction.
Okay, I completely disagree. The economy is in much better shape than it was in September of 2008. If you look at things like the borrowing rates and short-term borrowing rates, they're much, much lower than they were. They were at panic levels back then. There's a huge amount of cash, $1.84 trillion of cash on corporate balance sheets. Banks have reliquefied. The real issue now is an incentive for companies and banks to put money out there and to take risk. And what will move that is a new technology that creates tremendous productivity enhancements, or an M&A wave that just drives everybody into the market and says, we have to keep up, we have to do deals. So those are two things that I think could drive the investment of that capital. But I think we've reliquefied the balance sheets, and it's a lot safer now than it was before.
That may be the case, but Kimberly, you could argue that, we've still got unemployment close to 10%. It's kind of the jobless recovery that we all feared. Small businesses actually getting access to the credit they need. Yes, we're in a better shape, but maybe if we're in Brazil or somewhere else. But what about the United States?
Well, there is growth here, but what you have to focus on is the longer term. This is short-term dissension in the market, and there's still a lot of uncertainty. And so when people are uncertain, they're not going to progress and move forward. So that being said, you've got to be properly allocated globally, U.S. and internationally, and then also have those bonds, I believe, really short term so that you can keep up with inflation. But honestly, what I think is holding the market back and holding investors back, because there is a lot of cash on the sidelines, is the certainty of the market. And the thing that we need to do that is to have growth on the small business side. What's going to do that is getting those jobs back and getting that engine going again.
James.
Sure. With the success of the Republicans in the midterm elections, I feel, the rhetoric and the clarification will continue. But the tax cuts are going to be extended, whether the word is permanent or temporary. But I think it's, I don't want a foregone conclusion that they're going to get extended. To me, what's interesting is now the positioning for the tax reform. And an interesting article I saw in the Journal about, and maybe that's the starting point for negotiations of maybe the most extreme tax changes we've seen in decades, and I'm not sure if you've seen it, but I guess there's
we could just reduce the tax code to this. That would be a good start. We're running out of time, guys. We'll come back to it. Save that thought, Dunstan. And it's so cool. It's actually quite fascinating, isn't it, to just look at gold? It's such a cool thing,
You talk about that going back to 6,000 years. Think of the Old Testament when Moses was up on Mount Sinai.
Right.
What did they do? They built a golden calf. So we've been fascinated by this metal for a long, long time.
I've always wanted to do, go out gold prospecting. I think it's kind of cool. The giant nugget, that's the dream, isn't it? Talking of gold, though, we mentioned this before we went to Jeff, talking about the gold standard. James, there's been some calls saying, you know what, if we're going to get back some actual rigid fiscal discipline, maybe we just need to go back to a gold standard. How would that work, and do you agree with that?
Actually, no, I don't.
Why?
I'll go as far as to say I don't think it's practical. In terms of moving to a gold standard. To me, the most interesting thing going on in the markets now is almost a battle between, in terms of gold, you see China and its tightening policy, you see the U.S. and its easing policy, and gold becomes almost the scorecard that's being used in terms of if you have inflationary fears, the gold was one way versus, I guess today gold is coming off because they feel what China's doing is alleviating some of those concerns. So it's gonna, again, to me, it's a fascinating market. And in terms of the exhibit, it seems if people are paying to go in to see it, then that gold actually is making a pretty good return on its own investment in terms of that museum.
Seems a bit hyperbolic, right? I mean, a year or so ago, we were talking about moving away from the dollar as the international exchange, and people get upset and sort of panic-stricken, and the gold right now is the hot thing. And I don't think it's to be taken very seriously.
People always come back to the dollar eventually, though.
Yeah, they do.
They do, at least for now. Thank you, gentlemen.
Thank you.
All right. All right, guys, time for our best guess. Let's begin with James.
Well, thank you. We've heard a lot about and talked a lot about the buildup that led to the mortgage crisis, and maybe I'm going to take a moment to talk about the cleanup. Some of the nation's largest banks, B of A, JP, Citi, facing mounting lawsuits all about their origination process, underwriting process, securitization, and now even their foreclosure process. So it appears to me that while it took a compilation of errors to create this large problem, cleaning up this mess is somewhat equally daunting. So this is something that's going to linger for some time. People are going to have to come to the table to negotiate, but there's no quick fix to this. So again, you're going to hear a lot more about this issue, and the banks, when you hear about private sector jobs spiking, it's in the legal profession.
Oh, great. More lawyers' fees. Dunstan.
I'm going to piggyback a little bit off of James's comments and project. I don't believe that the foreclosure crisis is quite the crisis that we've been talking about. And I've done a story that's up on our website right now, foxbusiness.com, that talks about where we're leading, and this is compromise. And that compromise is going to be the banks are going to be forced into a situation where they're going to have to increase their loan modification programs. FDIC Chair Sheila Bair was leading in that direction during a speech earlier this week, as are, if you talk to some of them, the attorney generals from the states. This is where they'd like this to go. They don't want to beat these banks to death. What they'd like them to do is acknowledge mistakes and then get out there and modify some of these loans. It seems to me it's a win-win for everybody. If people are paying the loans, then the banks are getting their money. They're not defaulting on them. Who loses under that?
No one, but let's just hope it can be done sooner rather than later, rather than talking about it. All right, guys, I wanted to, interesting, in the UK, picked up on this, but this is getting tough with people on unemployment, and the UK is imposing this. It'd be interesting. Do I think this could happen in the US? Probably not. But people who are claiming unemployment benefits, up to 5 million people in the UK, will be ordered to regularly do 4 weeks of community work unpaid.
Wow.
To remain eligible for those unemployment benefits. In other words, you have to give something back. If you turn down a job, you lose your benefits for 3 months. Turn it down again, 6 months, and so on.
Yeah.
Pretty tough measures, but you know what? It'd be nice if someone could actually go out and do something to keep their benefits. I think it's a great idea. Will it happen here? No. That's my prayer. All right, thank you very much for being here, guys. Coming up.